Good morning, everyone. Microphone check, screen check. Looks like everything is working correctly here. Good, good. Yeah, all right. Welcome, welcome, welcome. hopefully, hopefully everyone is able to rest up, get ready for the day ahead. All that fun stuff. As per the usual, before jumping in, on the right side of the screen there, make sure to read through the Live Trader Morning Prep PDF. Very important to go through and understand everything that is inside there. Just a quick note for you all before we jump in, of course, on the YouTube side of things. Keep in mind that broadcast via YouTube does have between like a 5 and 30-second delay, depending on where you're logging in from, which can definitely impact the timeliness of what I may be talking about at any given moment. Along with that, I just want to take a second to give a shout out to our latest members that joined overnight, this morning, last night, etc. Thank you so much for the support. I'm pumped to have you on the SSFTG family. If you aren't a member yet, you do have a few different options to check out if you're looking to further your trading education and career. Here on YouTube, you can check out the join button below the stream. YouTube family gains access to the extended hours trading room, which continues on from the morning session until we close up shop, usually around like 10:30, 11 o'clock. Every member gains access to the Discord chat server, and of course, you get the awesome badge next to your name here on YouTube to show your support. To understand the day trading approach and what it is that I'm doing here every day in the room, look no further than the Day Trading Academy. Listen, the Academy isn't a small PDF that you're going to finish in an afternoon, right? This is a long-term, big investment in time. You're looking at 19 plus hours of course and study material, including homework, review. There's a lot of stuff there, so you best tuck in. And then finally, the big kahuna, the Mac Daddy, the VIP. VIPs have exclusive permanent access to our non-delayed stream, covering the entire morning session from 9 until whenever we close up shop. And that way you can ensure that you're on the fastest connection possible so you don't miss a beat. Alongside that, VIPs also have access to our monthly webinars, private events, one-on-one scheduling access, all kinds of cool stuff, and the list goes on and on. So whether you're here for the very first time or you're a seasoned VIP veteran over on the Zoom stream, welcome. I'm glad to have you trading alongside me today, analyzing these crazy markets of ours. Let's take a look at some news, take a look at what's going on for today, see what's happening and all of that fun stuff. Don't forget to grab your morning DP levels. Those are posted for you this morning on the major 7 markets. NASDAQ, S&P, gold, crude, euro, Bitcoin, and Ethereum all waiting there for you. As far as the news is concerned, looking through the major list of stuff that we've got here, I mean, really, we've got 830 news, which was the initial jobless claims. That's a pretty big number. They were forecasted 360,000, so 830, pretty big time slot. Along with that, they also had the Philly Fed Manufacturing Index that was forecasted at 28. We've got a lot of news that happened at 830, but it's not over yet. What perfect timing, too. Like, for real, 9:30. That's the time. Huh? That's the time that it was to go on the mic. That just doesn't make any sense to me, but whatever. Fed Chair Powell is testifying at 9:30. Phenomenal timing to do so. And yeah, that's really all we have to worry about today. And then the general overview as far as that is concerned. So starting off, let's take a look at the S&P and kind of see what's happening here. We are getting a nice, halfway decent pullback, question mark? Do we really want to call this a pullback? I think is the first thing that we have to ask ourselves, because really we kind of poked above the highs, and before that it just kind of poked underneath the lows, and now we're just kind of poking underneath the lows. It's not really, I mean, is it really pulling back, or is it just kind of going sideways? And with this kind of momentum, you know, we've got to look backward a little bit and say, well, where are we in the sequence, right? We've got this overall move to the upside, nice wave 3, into a wave 4 pullback, wave 5 finalization. It would make sense that this is an ABCD sideways consolidation. You can even see some slightly wider, or well, I guess wider, internal structures inside of there along with it. So it does fit. Like, this is really good timing as far as going sideways is concerned, to just kind of be chopping back and forth and not really doing much. So as far as an ABCD correction goes, it works. Now, from that perspective, where could the bottom be? Well, usually they're going to put a structural bottom in. They missed that so far. Maybe we get a little bit more of a dip down into the 43.40s, a little under the 40s. That would be the better zone of interest, especially considering that lines up with that phenomenal little swing right there. What a spot for a trap to take place. How many stops do you want to bet are sitting underneath that swing when they should be a bit further away? Well, we'll see. Technically, it is a confirmed swing, and the actual the good trap usually happens between the two confirmed swings. Well, that's where it is right now. So, if it does start breaking that low, buyers are going to really want to see a quick reversal up, and if they can't get it, we may be in for a bit of a dive further back down. Looking at the volume perspective from top to bottom, at least. Great, bugged. Fantastic. If we go all the way back up then, will that work? Okay, we've got the major POC of the entire move, which is going to be down here at 43.10. So if this is going to get a bit more leg to the downside and really kind of expand out into a wider trend, then that would be the likely objective, is to see them coming back down into a zone of interest back where there was some. And that's back at 13.10. Or 43.10. Jeez, 43.10. Correction. Now, if we're going from the bottom to the top, and we carry that on up to that new high, technically speaking, that will give us an idea as far as what the market is doing right here. And wow, that POC is right up at the top. All right, if we drag this a little bit further over, let's see if they stuck it up a little bit for. Oh no, oh, that's real bad. Okay, that's a totally different context that just set up here. Look at where the POC shifted up to and where the rejection was. That's a little bit of a problem. The sellers may be looking for some downside leg. It would make sense, timing-wise, especially. Yikes. Over on gold, a little bit more continuation to the upside. All things considered, though, it's not really getting a whole lot done. Fairly choppy, sideways, meh. If this is a wider channel, it's a pretty nasty looking one, but it would be still miles above where the current market is. The other side of things would be maybe internal highs like a wedge, and they're just not fitting that well. They're kind of gross looking inside there. So really, as far as the overall movement is concerned, it just feels kind of gross. Nothing really fits very well, and it doesn't really want to follow along with anything. If we're looking at these larger pullbacks, all of them have basically been L2s along the way. We had the L2 into another L2, into another L2, into another L2, into another L2, and we did finally just rotate back above the highs. So one of two things is going to happen. They're either going to climb the ladder and start hitting L1s, or we're going to see a repetition off of another L2. My preference, being slightly masochistic, I would prefer to see an L3 and see them stair step down a little bit. Going into it and saying, you know what, I know that the buyers are going to want to try to hold the L1. I know they're really going to want to try to hold the L2. Chances are they're going to start getting a little bit nervous in the threes, which is where that previous major structural support comes in. Usually when zones let loose, they go to the next one and find support. It would make a lot of sense. But the problem is, if they don't hold the L3, there's not really much else to hold it up. So it could get pretty nasty pretty quick. Over on crude oil, mostly sideways still. It's not really doing much. We did get the rollover notification. I really didn't look at volume because I don't trade it enough to really care, if I'm totally honest. As far as the volume is concerned versus the price action, the chart visually will look the same either way. And this gives us a really big clue as far as coming back to that previous territory of the measured move lower, that A to B, C to D move, which was, I mean, literally perfect. A literal one-to-one move. You don't get those very often, and the market responded with some pretty strong bullishness. We're coming back to that area. So if we're in that mentality of, well, obviously the buyers came in off that, let's go down and see where the volume actually came in to support that move. Oh, wait a minute. Hang on. This is bug data. Grumble, bug data. We did likely have a POC down here. It's tough to say. Maybe. Yeah, they might have. That POC might still be back up there. Yeah, that didn't change. So realistically, that would have been the POC, and buyers were looking for a continuation up. Well, if we're looking at it from that perspective, we've got to ask ourselves, what type of traders are these? Are these scalpers or are they swing traders? If they're swing traders, their targets are way above the top, which is a possibility, sure. But realistically, a lot of these traders are going to be more likely on the scalp side. And hey, what do you know? All that resistance came in right at the scalp target. Whoa, weird. So we've got some pretty obvious resistance going on here, and the market is rejecting it back down off of some pretty logical points. It wasn't really able to get it back above that scalper's target either. So as far as the market is concerned, I mean, the scalpers were satisfied, but the swings are stuck. They're not really getting a whole lot done. Now, if we move this all the way further forward and see what's happened so far, since we haven't really broken a new high or new low, we can see that the POC has actually shifted up and the market is currently underneath it. That may be suggesting that if these were buyers, they've taken profit. And if they were, maybe sellers who were stuck, they doubled down, tripled down, quadrupled down big time. Big POC shift. Seeing this drive back lower, we're right back in the break-even territory. So by not really any means at all do I want to be a seller way the heck down here. But it would make some sense to see, maybe a little bit of a return back up to settlement, 7250s. Maybe a pop back up to retest around the 74s, get that POC. Just not way down here. It's got some problems down here. We'll have to wait. Over on the euro, the 15-minute chart is starting to at least procure some form of a trend, I suppose. We've got a nice, fairly obvious three-pressed drive to the downside, and yes, all of them did make new lows, but they did not follow through testing the low of the wedge at all. What would make some fairly good sense here is that the market's transitioning more into a range, which, I mean, duh. That's been going on for a minute. It's been transitioning for a long time here. This is having a tough time. So as far as the overall momentum is concerned, we have to look at where is the high probability resistance, where is the high probability support. It seems like the lows are getting weaker and weaker and weaker. So the buyers are getting pretty aggressive buying the lows. Makes a lot more sense that they're still offsetting the bottom, but not by much. And the more lows that are being formed, the less they're offsetting. The next time around, they might not even be able to make it down to the lows. It could be a higher low, and we transition away. One thing is for sure, though, from a range perspective, the market is continuing down, lower highs, lower lows. So sellers have a better bias. And when sellers have a better bias, it's usually more beneficial to look at the last leg that was successful. The last successful full rotation all the way from bottom back to the bottom breakdown has a POC that was top weighted up at 1.18735. We can very obviously see that sellers are pretty aggressively defending that area. My concern, though, is that with this strong of a leg down, are these sellers really still in anymore? I mean, really? I have a really hard time believing that they're still in after this strong of a drive down with full position sizes. So when the market's returning back up to this 18,735, there may be sellers who are waiting to push down there, but I've got to approach this with some sense of realism here. If I'm going to be selling here and my stop's up here, what kind of trader am I? I'm a swing trader. My target's back down to the lows. I am looking at a low probability, high reward scenario in this zone. Perfect spot for options, right? I know we've been talking about those for a little while. This is one of those areas where long-term shorts will be looking to go back down in the original direction of the trend, which is very obviously down. So we'll see. So far, it's got a lot to go until the buyers prove anything. And over on Bitcoin, continuing its way back down, 31,750s at the moment, grinding its way lower on these three lower highs and lower lows, still going down, right? It's not making any higher highs. It's not doing anything really that would demonstrate that we've got any supportiveness happening. So until that happens, realistically, we're still in a downtrend. The market's continuing its way down. It's very choppy. And in this type of move, you can almost kind of feel what this is trying to do, right? If you were to take this entire picture, similar to what we're seeing on the euro, and scrunch it all together on a larger perspective, right? So if we slam this out to like a 60-minute chart, this could very easily just be perpetual sell-side failures that could roll back to the upside. But we've got to be realistic here. Is that looking through some rose-colored glasses? And I think the answer to that right now, at least, would be yes, because we're not making any new highs. Why would I believe the bulls? Right? The last time they made a new high was over there. Since then, it's been failing. So until we get something to prove that the bulls are coming back in, I just can't believe them. Now, as far as BTFD buy the dip kind of stuff, yeah, we are below some previous major swing lows in the 31,000s. Great spot for interest, and buyers are buying it. The next major spot would be underneath 30,000, actually right back to around 30K, a little above. Then underneath that's 28,600s or so, and then 20,000. Over on Ethereum, similar situation. We are getting those lower perpetual drives to the downside. If we look at this from an ABCD stance, I mean, you know, again, we're starting to get closer to that one-to-one move. The one-to-one full ABCD is down at 1827.86. Not quite there yet, but from a structural perspective, we're at least making it down to test it. I mean, at least it's hitting it. It's giving us something to work with. So, you know, descending wedge style, we're running off of the resistance. I mean, it's working out perfectly. This is a nice little zone for the market to find some support down at the lows, just sub 1850s. We're back testing the 1618 of that move from the 10K on Bitcoin. Jeez, yeah. That's just a little while ago, huh? All right, taking a look at the morning session here. Let's look at the NASDAQ on the bigger picture. We were joking last night talking about on Discord how, and actually I posted on Twitter too because I think it's really funny. The daily chart is showing a corrective phase pullback, which if we're looking at the highs, the pullback, let me just show you the picture. It's really funny. I like it. Right, this is what I'm talking about. The pullback is a 2.22% pullback, which would put it at 14,666. Hashtag just saying. Now, as far as, you know, it's just kind of being facetious, but a pullback of value does put it right around that previous zone of support. It lines up beautifully. It's just really interesting, right? What a coincidence how everything is lining up so well there. Anyway, as far as everything else is concerned, I mean, you know, we're looking at the market stalling. We're an inside bar from yesterday, basically, although it did poke its high out just for a second. Super weak bull bar, incredibly weak bear bar. Nobody's really showing up to the party. We know the important thing here is that we see congestion and several bear bars, like 3 to 5 bear bars, before a larger descent. So far, we basically have dojis. Like, we're not really getting anything at the moment, which may be the start of things, you know, but it's too early to tell. The previous low day is going to be a pretty big zone of interest, 14,838s or so. Golly gee willikers, Batman, that thing's way out there. Let's zoom in just a little bit. Looking at the previous low, that was the inside bar, and if you look at the previous low before that, which structurally makes a lot more sense, that would be the hot spot. So we've got some pretty nice dip action for buyers. It would be really nice to see a dip just a bit further into, like, you know, the 760s. If it wants to go a little bit further, the previous consolidation after that was in the 700s. So we've got a little bit to go if it starts cracking through there. Over on the 15-minute perspective, I mean, really from here, we're not really getting new highs. We're not really getting new lows. It's not really doing anything. We're just wedging. Yes, it did technically, I guess. But, you know, the thing that we really want to see here is what are they trying to do? And so far, they've missed the high, and now they're trying to break the low. It would at least suggest that a deeper pullback would make sense. So if we're going off of the lows up to that first high, the initial pullback was an L3, which would suggest confusion. Power breakout above the highs would see L1s. We already talked about that one. We actually had that one. Worked out very nicely. Great continuation back to the upside. When it pull back again, another L1. We continue back up again. We finally get the deeper pullback. Goes into the L2. Continues back up into a new high. We're now bouncing off the L2s. And as far as the sideways consolidation goes, we can see all of the support. Buyers are really sloppy around the L1s. I'd be more interested to see a deeper pullback into the 2s. All right. Let's see. Do you have MCL 0821 chart, a 10% drop at the close yesterday, only to recover on the opening candle. Chances are, because you're in rollover, the rollover is playing games with it. Likely, it's trying to calculate the previous close versus the new close price, or the new open price, rather. So that immediate drop and immediate recovery is very likely that rollover process. I wouldn't put much else on it, though. I didn't hear any news or anything crazy happen, so. Unless you know something, then please enlighten me. But I didn't hear anything, at least. And given that I had the rollover notification this morning, I would assume that it's probably just due to rollover. As far as trading is concerned, still stick with the one that's trading the most volume. So. I know I've got the 09 contract up, but, you know, double check the volume, make sure you're trading the appropriate one. As far as crude oil is concerned, the full size, the September contract still hasn't won in volume. The August contract is winning. So the 08 contract is the one that's still applicable for the majority of people today. Tomorrow it'll probably change. Go into Friday with the new contract. All right. Looking at what the market's been doing so far just another up and down. This is really reminiscent of what happened yesterday. We had that start just up, down, up, down, up, down. A little bit different context after this sideways action, but looking at where we are at the moment, so far the market started with a rotation back to the upside, which was, I mean, almost a perfect ABCD again. These things are all over the place. ABCD corrective phase back to the upside, and then it rolled all the way back to the downside, and it looks like another ABCD corrective phase back to, yeah, almost perfect. So we've got a perfect ABCD up. Well, not perfect. 1.17 is not perfect, but it's pretty good. And then down to a 1.05, almost perfect. We've just got ABCDs going back and forth. That would usually dictate that we're probably sideways, as if it wasn't obvious enough. If we look at the larger context, we can also see from here that the market's pretty sideways. It's having a tough time. If we zoom out a little bit further to a 5-minute, we can understand why. We're at the completionary leg after 5. We would expect the market to go a bit sideways, range bound, chop around a bit, not really do much. But, you know, where could the market want to pull back to, right? And that's going to be the next major question. If we zoom out to a 15-minute chart, if we look at the right market here, NQ, looking at those value pullbacks first, right? Let's look at where a likely scenario would be as far as value is concerned. So we've got the last pullback from there to there. Oops, wrong tool. From there to there, which is 0.77. And this is on a 15-minute chart, keep in mind. The next one after that was this giant dive to the downside, is 0.89. The next one was the giant dive to the downside, which was 1.08. And then the most recent one, which was right here, which is about 0.9. So one thing is very obvious. The market tends to like to buy those 1% pullbacks, and potentially even a little bit ahead of it. That would immediately lead me to believe that in terms of buying value, I need to look for a double value pullback. What better pullback than a 1.8 to 2% zone, right? So if we're going down for a 1.8 to 2% zone, that would give us a bracket area of interest there to here. Come on, line, work with me. There we go. So that gives us our double value zone of interest down in the 14,725s, which is right around the 750s that we were talking about already. That would be the area of interest that a lot of traders are really going to be eyeballing in terms of making sure that they're buying an appropriate value. So let's make sure that we get that green so we know what's going on. And this is the double value pullback. See how quickly I forget what that acronym means. Anyway, we've got that major zone of interest as far as swings are concerned to the for the longs. Now, if we get it down into that area, that is a massive area of interest that a lot of traders will be looking for support out of with a continuation back up. If it begins breaking through that, man, we're in for a little bit of trouble here. We could be looking for a deeper pullback. Let's see what else lines up with it. It's right on top of the L4 as well. Wow. How about the previous volume node? Up to the impulse highs? That's got to be up here, right? Yeah, 4875. That is the previous last major volume, though, right there. And this one really didn't win by much. Okay, so we do have some volume potentially to aid in it. Lots of interest there. Is there anything else that really stands out here as far as completionary legs? The upside movement to the top. Oh, geez, we're hitting a 16182. too. Man, we are in a really nasty spot at the moment. This needs a pullback really bad. It's either got to pull back down into a double value, or we're going to break above 15,000. And the fact that this consolidation is happening just ahead of 15,000, can you imagine how many traders are buying this looking to be, you know, the ones that get into the 15Ks, and it still hasn't gone, right? Let's go back to Bitcoin when it tried going to 20,000 the first time and went to 19,900 something and then collapsed to 3,000, you know, or whatever. I mean, this is kind of what I would be thinking if I were long way up at the top and we just missed it 2 major times like that. Like, wait a minute. That's a bit concerning. Like, why? Why is it doing this? We'll see where they want to go. As far as corrective phases go, we've got about 3.5 minutes to go until the open. ABCDs would put supportive movement at, not 0.91. That would put support down at 14,827 in the near term, which fits back down to the lows of the range as well. It's a nice little spot. So in the short term and the long term, we've got a couple different areas that we can potentially work with. As far as the faster perspective is concerned, I mean, really, the market hasn't really done much. We had the cycle down to a new low, then 2 legs up to a new high, then 2 legs down to a new low. We're cycling. Feels like this is either going to be an attempt at a new trend with that bear cycle down, bear flag continuation, nice breakdown. Or if we look back a little bit here, we can see fairly obviously, as far as structure is concerned, a nice 5-wave completionary move back. Let's follow the rabbit hole a little bit here. ABCD phase up. Almost. So if we do start breaking down here and we start separating away, this could be the beginning portion of that 3rd wave in the middle, driving back down to a new low. So, I mean, the sellers have an argument. They definitely have an argument. It's not the prettiest looking thing in the world, but it's there. 928. First big zone of interest hitting inside here with 2 minutes to go until the open. 928 is also the final capabilities of traders to be able to modify their at the open orders. That's why you've got usually a little bit of a bump there. Where did my price line go? What is it called? Price line? Awesome. I love when it doesn't work. Price line. Is it this one? Seems like it's got a lot more stuff on it than my last one. No, that's it. All right. So at the moment, the S&P is in an outside gap down. At the moment, because this is the low. And this is current price. So they are, ooh, man, if they open up above that that previous low a day, that's going to be at 43.5450. You know, that's really awkward. And yeah, exactly, Adam. That's a great great comment as well. We also have, and what perfect timing, you know, just let's start a speech at 9:30. Anyway. We also have that Fed chair testifying at 9:30 to make things even worse. See what they want to do here. As far as this pullback is concerned, going into the open, the impulse highs, we've got the POC that they're hovering over right now, trying to fight over who's in control. If we go backward a little bit in terms of other zones of interest, that would give us... That's already been used up. Dang, 14,905. That's already been used up multiple times. Whoops, I didn't want to delete the moving average. Crap. No, wrong one. There we go. All right, so technically the S&P opened with an outside gap down and then immediately starts jumping back inside. So they're trying to find something to get going here. Nice bearish potential attempt to try to get this wedge to break down. Developing POC is currently underneath it. Sellers are trying to get this to break away. Realistically, if it is going to break away, they should be able to at least try to get a slight return, given how choppy it is. But the 930 open may be enough strength to drive it through the lows. See if sellers can get a bit more. Wouldn't it be nice to have an undo? Man, that'd save a lot of time. The nice thing that they do have is you can drag and drop indicators from other charts, so it's definitely helpful. Like if I wanted my 21 EMA on my 500 tick, all I would have to do is click it on my ES chart, my S&P chart, and drag it over, and now it's over here. It looks terrible on the blue background, but really cool that you can do that. All right, well, they didn't really give a chance to catch a retrace on that move, which, you know, again, it's the open. That's kind of expected. If we continue this back a little bit, we've got the POC waiting back up at 1493. Yeah, definitely. I don't know if it'll work on every single indicator, but I know it works on most of them. What happened to my bar timer? Man, what happened to all my indicators? They're all gone. Bar timer. Let me get that back on there. There we go. I'm always looking for ways to make my life easier, you know? Drag and drop's a heck of a lot easier than right-click indicators. Blah, 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 blah. Hope to God I set my template so it's not so it's the default if it's got more than one setting, you know. Been there, done that. Seeing this little poke to the upside. The way that they're forming in here, I'm kind of curious if this follows through with a bear bar or a bull bar. Bull bar, okay. Good continuation back to the upside. How do they want to follow this? Yikes. Bears trying to churn back down. Very early developing POC. S&P finding support and so far demonstrating movement back inside the range, although there's a minute and a half, a lot can change. Whoo, NASDAQ just got slapped back down again. Fair enough. Big bull bar back up. The last POC really didn't have a whole lot of time to create, but that was back up at the 70-75s. Oh, the S&P's starting to get underneath now. Ruh-roh, that's a problem. Sellers are going to be looking for a bit of continuation, and the S&P is definitely following through, helping that out. Bears continuing further to the downside. You can't even get above a previous bull bar. Like, just a massive trap. The S&P is turning back down. Huge bear bar now if it closes down here. 20 seconds left, though. It could even close as a doji. Got to give it some time. Really? These data bugs are driving me freaking crazy. At the moment, 56 quarter is the POC on the S&P, and I doubt that's going to change. Yep, beautiful bear bar to start the day off, too. Whoa, wow. Look at the bear bar on the NASDAQ, too. Holy crap. That's how you plot a bear bar right there. Jeez. The POC way back 69 quarter. This is down into that 1-to-1 territory. Holy crap. This thing's just getting pummeled. Looking at this from the bigger perspective, hard to not see that larger... I mean, we're basically at a 1-to-1 corrective phase down. Sellers are obviously still in control, but geez. Nice continuation to the downside. Finally rotating back up. Bears immediately sweep back into that. This is where it would make sense to see some corrective phasing. Not necessarily immediately drop back down again, but just because that's what's expected doesn't mean that's what's going to happen. Nice attempted continuation up. Basically a bear bar, doji. It's after a string of four or five bull bars back to the upside. I mean, that's going to be tough to want to be the first one back to that party. Now, on the S&P, 43.56 quarter would be a retest of the 5-minute POC, and that would also be looking for a continuation back to the downside. There's quite a bit of volatility. So 56 quarter, 57 quarter, 58 quarter in that area. These are... You know, you could even potentially widen out to 2-point zones. Developing POC after the first 5 is moving now on the S&P, to be noted. It's a bit lower. NASDAQ looking for a bit of continuation. Didn't get filled. Got to wait for it to retest back up. I tried taking it, but I got a really late fill, and it was too far down. Had to cancel it. Sellers are going to be looking for a continuation back down. Ugh, it just didn't get the correction back up. Just need a little bit of a pop. I missed the original entry, didn't fill. Another bear bar at the downside, likely trying to break down through the lows after that. Bummer, I didn't get a fill. It's a really nice rotation back down, but nothing you can do about it if it doesn't fill you, right? That POC's way up at the top. S&P hasn't gotten back up to hit that entry point. More breakdown momentum. Hey, good morning. Welcome, welcome. Welcome to the madhouse. Finally getting a correction. Let's see, can they make it down to the 1? They did. Nice. We're to 1.02 now. Seller still on a very strong breakdown phase. We'll be looking for a continuation movement to the downside. It gives me no chance to actually sell. It's gone. These little bitty pullbacks. The algos are having fun. Or hyper scalpers. If you're scalping this thing like a madman, then or a mad person, then you're definitely inside this. Little bit of consolidation once again. No retrace on the S&P, little bit of a bummer. Couldn't get that fill back on the first 5. Now it's going to be probably a bit lower at the top of the bear bar. Would make a bit more sense. More continuation down, just sliding away. Missed the fill on actually the last few times. The S&P missed my entry by about a point, and the NASDAQ I just didn't get a fill on the ask. Would be nice to have some form of like an ABCD phase back up for sellers to sell into, short-term buyers to take profit, get it out of their system. Big outside gap down, though. Remember where we are. 14,726 quarters in this area. Or further. All right, a little bit of a drive back up after hitting the 1-to-1 move down, little over the 1-to-1. Watching around previous POC 3750s or so. If it's able to break above that, then it's probably going to be able to rally up towards the 70s. So it's a pretty wide window. Sellers are pretty obviously in control, and we aren't in a major turning point yet. But, to be fair, we did just cycle off of a major low. Did they actually hit a new low? No, they missed it by like a tick. Oof. Okay. POC is way down at the bottom, 14,800. Man, they weren't shy about that at all, huh? Wow. Big round number. Okay. A bit more selling follow through, and after this many bear sequences to the downside, buyers are going to have a little bit of a hard time trying to get much going anymore. Initially, it would have looked back saying, you know, look at that bull leg up. But if we continue back and start triggering these bears down, triggering above the last bear bar, that kind of stuff, sellers have a pretty good reason to believe that it's going to go a bit further. Geez, that snapped all the way back down and closes a doji in like a millisecond. What just happened there? Whoa, that was a bull bar for a second. Then it was an inside bar doji. Gross. All right. Speaking of doji, there's number 2. See if we can get a corrective phase back up, maybe an ABCD. Look a bit nicer. S&P still hanging out up there at the 5450s. If we're looking at the first 15 POC and expanding out a little further, we're fighting over right now. 4350. Doing the same on the NASDAQ and continuing it to the first 15. We've got a POC down at the bottom, 14,813. Buyers could be shifting. Or at the very least, we can see sellers are exiting a bit more aggressively. POC is shifting down now in the short term, now to 813 quarter, although this is a developing POC. Ooh, what a horrible bear bar. Okay. POC shifting back up. See if they can reconfirm. Very nice bear continuation. Looking for a reason for sellers to slam this back to the downside, back underneath those most recent lows, and that is a fantastic reason for them to do it. So far, if they do want to have a corrective phase back up, we've got the POC at 13 quarter. And then, you know, again, if it wants to break further up than that, we know the next spot is all the way up here at 37s or so. Nice retest to the POC for sellers to try to press the market back down again. From here, if it's going to go further up, we're probably going to attempt to test the previous May. Oh, man. If any bulls tried getting in on that, they just got dunked on. Hang on a second. This just shifted real fast. That jumped up real quick, slammed all the way back down, then slammed all the way back up. Look at the herky-jerky stuff going on here. Got to be careful. Holy crap. All right, bit more continuation back up. Next zone isn't until the 37s, so we either have a continuation back down for a scalper's target, which at the moment would be about a little ahead of 800s. Sellers starting to pop above the previous bear bar on the S&P 5150. 5250 would be the offset, which I think makes a little more sense here. Oh, geez. Sellers hit 5150. Looking for scalpers targets on the S&P, and at the same time watching the NASDAQ while they're jumping up here. This is a major zone of interest. I love this area. Beautiful spot. Retesting that previous major POC. We're finally getting a pullback of substance. It's an ABCD corrective phase back up into a previous confirmed POC. Uh, 54, 50, 56, 50 would be the next one. As far as from that average perspective goes, if it were to just shoot straight down right now, that'd be in like the 817s, 815s or so. Tested the entry at 54.50, but didn't get a fill. Targets at 52.50 on the S&P, still waiting. Finally swept in on that final portion there. Still looking for a scalp entry target, at least on the S&P, but it's a bit awkward now back at 53.50. We're still underneath the previous low of day, which is back up at 56.50. Now, as far as the continuation back to the upside, let's keep track of where we're at. We've got a 1618 move to the upside now. I don't really want to add more here, though, because the next area would be at the 5-minute POC and up in the 75s. I would still rather wait for a little bit and see. If they just rotate straight down, then it's going to be down in the 14s now. Tested the next entry, but no fill. They're going to make me work for it today, huh? Looking at the way that this is moving, we are starting to creep up into that other previous POC, but we've got to be cognizant of what's going on in the short term here. This is a nice breakaway move and possibly and very likely a wave 3, at least for now, until we get a little bit more info. So as it stands, this could have one more leg to the upside and still make pretty good sense. Again, one of the biggest mistakes that the majority of traders make when they're building into positions, whether it's the micro or the mini or whatever, is building in too quickly and creating an unsustainable position. Now, the nice thing is, if we go over, since I'm still building into the mini, and that might make me deal with this for a little while, we could load up the micro and still scalp off of that. That'd be interesting. What is now the MNQ? Oh crap. No, I did the instrument link. No. Go back to NASDAQ. Big jump to the upside. I will add a little bit more risk up here. I like this zone to increase, although my average obviously needs quite a bit of work. 950, 10 o'clock around the corner. As far as the MNQ is concerned, a 500 tick might work. I might have to do it this way, though. It might get loud for a second. Grandma is coming over to visit the kids this morning. All right, so we've got the micro NASDAQ on the left side there, just while I'm building into the mini. That'll give us a little bit of flexibility as far as that's concerned. There it is. All right. We've got a nice little shallow pullback, although still seeing resistance off of the top. Nice continuation back to the downside. Yeah, I know, right? Got to get that granny time in. Downside objectives for scalpers going to be down in the 22s. And if we carry this all the way up to the highs, we've got that POC back at 13.25. I obviously wasn't alone. So we'll see what they want to do there. Where is my other micro? There we go. From the micro perspective, as far as this continuation phase goes, again, realistically, the way that we're setting up is that we are in the third wave of a micro cycle that's looking for more continuation up. Oh, first target got hit on the S&P, but I didn't get a fill on the secondary one. It tapped it and didn't fill it. All right, can they take it out a little? There we go. What a pain, S&P. Out on the S&P for, I guess, the better part of a scalp after commissions, mostly break even, though. Kind of worthless from that perspective. Bulls getting a continuation back to the upside. As far as upside continuation, usually the first objective is going to be a 618, which would put targets at like 14,892. Got a little bit more sideways action. There's not really much going on in terms of the highs being broken or the lows being broken. They're just sort of hanging out here. Back down to these range lows. I'll reduce a bit and accept the initial portion of the loss just to make position averaging a bit easier on the NASDAQ. That creates a situation where a 2-to-1 now would fit into the lows. Although it doesn't fit to the 13.25, which is a little bit of a bummer. Now it does. There we go. All right. 2-to-1 objective would be down in the 815.50s. One, two, three, and then we'll see if they can continue beyond that. All right. There we go. Now, as far as the micro NASDAQ is concerned, it still looks like the shorts are going to have a bit of a tough time. Nice bullish bar back to the upside again. On the micro, this is going to move a little bit quicker, so a 500 tick might not be as optimal during this period in time. You can see how many candles we're plotting. How about a 750? I think 1,000 tick's going to be a little bit too slow. 750 looks closer. Yeah, okay. Starting to see a little bit more descent to the downside. Bulls attempting to get a very nice bounce back to the upside. The 512 tick. There you go. Very strong reversal back to the upside after an ABCD corrective phase back down. On the micro side, bulls will be looking for the pierce underneath the previous bull bar. Nice spot to re-up a little bit more, and that also modifies my position. No. There we go. All right, nice little pullback here. Continuation phasing bulls trying to get the majority of the next leg up. But remember where we are. If this is going to be the fifth leg, then realistically, this could be more towards the end of this continuation to the upside. But buyers are still attempting to get that drive up. Settlement is at 14,897. Jeez, there's like no pullbacks. It's just straight up and straight down and nothing in between, huh? All right, from here. Gonna have to do more work on the average again, although the target is still inside the lows. It's below the POC again, which is a bit of a bummer. 893s are going to be the next major zone, which we are already very close to. Holy crap. All right, might have some positioning to do here. Nice pop into the 893s. There we go. I still have some work to do on my average. I'm not satisfied where it is, unless this thing just collapses through the lows. I'm not quite satisfied where it is, in that it's kind of... I just want it to be a bit further up. So, may start exiting if we push back into the 54s again. Bulls are trying to get more continuation up. We have completed that 0.61 move to the upside. The next objective, if it is going to go further up, would be a 1-to-1 move, which is right there, up at 14,912. Don't mind the extra noise, like I said. Grandma's here. As far as, given the way that this is moving, just to ensure that we're on both sides of things, the first objective, if I'm looking to lighten up just a bit, is going to be down in the 858, 78s. 5. There. Let's go for something like that. That would put the average in a significantly more favorable position. Let's see. 1, 2, 3, 4, 5, 6, 7, 8. And then 2. Yeah, right about there. That was a pretty good eyeball right there. The POC did shift up a little bit, so I'll modify just to the 2-to-1, and then we'll just keep going from there. Right. More continuation back to the upside. Not really any pullback as of yet. If we're looking at the cycling off of the lows, we've got that... Ooh, that was too far down. Let's try that again. We've got the cycle off of a to-the-tick L4, at least on the micro NASDAQ. Continuation back up into an L2. That's a little bit, deeper than you would expect. Usually with an L4, in a strong rotation, you'll get an L1. Now, coincidentally, uncoincidentally, we do have an L1 that hit right there after it broke the highs. hindsight 2020, right? More continuation back to the upside, had the L2 on that deeper move, although the buyers on the 1 did try to show up, and then a larger breakout to the upside. So if the bulls are going to keep this up, likely we're going to see those L1s attempting to hold, and if they're unable to hold, the next spot would be the 2s. Now, if the 2s don't hold, historically what we've been seeing is 4s. So it's a bit awkward in here. Really, buyers want to hold the 1s and not give it a whole lot of space beyond that. I think the way you calculate and average in and out in a trade like this one would be great for a future webinar. I was actually just thinking the same thing. This is I was looking at the recording as far as the timestamp goes, going right into 10 o'clock, because this would be a really good one to look at cutting out as like an excerpt and then talking over what I'm doing, rather than listening to me talk through right now. It's you know how it is when a trade's going on at the time. It's hard to say everything. I'm definitely with you. I think that'd be a really cool video. We are going into 10 o'clock, but given the way that things are going and given the concept of wanting to make this into a video that I can then use as a training material, I don't really want to go to the extended session right now because that's going to cut into the recording. So I'm just going to let this go, and we'll just keep going with it for today and just skip the extended session for this time around, just for the sake of having a good recording. Got a nice L1 continuation back up. We've got a double top at the highs. A two-legged corrective phase back down would be a 3-press wedge low, hovering just inside the L1s if it wants to actually get something structural happening. So give me 1 second here. I'm going to grab a drink, and then we'll roll into 10 o'clock. Okay. Let's keep it on. S&P continuing back to the upside with more continuation back up. See what they're able to get done here. On the micro NASDAQ, down in the L1 on a retest of a 3-press wedge low would be the zone of interest where buyers will likely try to come in on a retest bounce. Nice little spot for buyers to try to kick it back up from here. The upside objective with this in mind would be at least up to around 81. $81 would be the half to one objective. There it is. Nice little half to one target fill on the micro, although I know it's the micro and it's not really worth much. Good example of how you can still utilize it. Nice continuation dive to the bottom of L1 now, breaking through the lows of the wedge. Churning down pretty aggressively, and back to the 5-minute POC on the other end of things. If we're looking at the first 15 POC, we can see that that was very aggressively bottom weighted. Right? So the fact that we're rotating back up, assuming that those traders are correct, successful, winning side traders, then realistically it would make a lot of sense to, you know, see some trading happening at around the 869 quarters, some defense, some interest. I'm going to reduce into that dive down there. There's too much support happening off of this area for me to not have to reduce at least a little bit. And when I say a little bit, I mean the majority of it. I do not like the price actions happening down here. I apologize for being probably not helpful in that dip for everyone. But this dive down to retest that POC scares the crap out of me. I need to see this follow through with a bit more. And the fact that we're hovering right around that break even or just a little bit, that's... I've got to stay cognizant of where we are. I would rather position myself in a better location. This does mean that, obviously, the average is way the heck up there. So if we do get that drive down, the downside objective would be in the 29s. So we've got a lot of room to go if it wants to fall. So we'll see if this bad boy can keep on going, but if we can get a bit more proof for the POC to start changing again, you know, maybe a little bit further up here or something, then I would feel a bit better, but what is... Oh, give me 1 second, sorry. So as far as the continuation to the downside goes, you know, expecting an ABCD corrective phase and this to be the exact top doesn't necessarily have to be the case. But looking at it from where we are in the bigger picture, if the market is going to try to hold this as a zone of interest, a lot of times we do get at least a halfway decent pushback down, which, you know, makes sense as to why we're taking profit here. If it starts losing its grip, though, there's some clues that we might not really want to be holding short for too much longer. What is the one leg to etc. indicator use called? I'm trying to add it to my chart, but I didn't know what the indicator was called. Are you talking about the when I'm doing this? All of those? That's an indicator that I got off of the NinjaTrader forums, I believe. Or it might have been on futures.io, one of the two. Because I don't know, I'm not going to post it because I don't know who actually owns the rights to it. But it's on either futures.io or it's on Ninja's forum, one of the two. Good continuation back to the downside. Sellers are looking for more if they're able to get it going. We kind of know the scenario here. But the bigger picture, you know, as far as where the average is, we've got a higher high and then a lower high and a nice dive down. Keeping this all into perspective with all these ABCDs all over the place. The fact that this is a 1.25 down and immediate bounce back up, you know, a little bit concerning. If we look at the last time we had a slide down, it was either an immediate reversal straight back up where it doubled, tripled itself up, or after a big slide, it just went sideways and kind of hovered around, typically hovering in the lower portions of the area that it created. Right now, it seems more like it's trying to create that V bottom, so we're on some touchy ground. The L4, the L2, still hasn't hit the L2. Market just kind of messing around, not really doing a whole lot of anything. S&P chopping. We have a small little, I don't want to call it... I guess it would be a spinning top, isn't it identical on top and bottom? Spinning top on the highs. The one concern would be a bear bar that looks like the bull bar on the other side. That would be basically just a perfect twin reversal. Speaking of indicators, when you have time, how do we get the one that you measure with the L1, L2? Those are the ratios. Those are the ratios that we use in the Day Trading Academy. Those are all outlined in Chapter 8. Unit 2, Chapter 8. Let me specify. A little bit more continuation back to the upside. We haven't seen a retest of the POC. That could just be a continuation for the bulls. But if we look at this from a realistic standpoint, we've got the cycling already kind of done. You know, we've got the middle wave. We've got the final leg. We've got everything done with. You would expect to see some ABCD corrective phasing and for this to take a little while. And, you know, if it does make it back up to the highs, that just adds to the resistance. So I like this little return back up to the highs here to increase in terms of size again, to ensure that I'm in a logical point. But I've got to remember where we are in this bigger picture, because, you know, this is in the middle. And if it does want to jerk back to the upside, 15,000 would be the next spot, you know? Ooh, POC just shifted to the upside. I will increase risk on that. Not much, but I will increase risk on that. I do like that. As far as the continuation to the downside goes, actual risk, a 2-to-1 is going to be like nothing. That's back down to here, but I suppose just given the fact that it's there and we've got the 5-minute POC, it would be logical to at least take something off at a 2-to-1. Nice continuation drive back to the downside. All right. Nice drive lower for scalper's objective. Makes a lot of sense down in the 1.5, 2-to-1 area. Good enough. Generally speaking, though, I want to try to maintain the short position, given the overall movement that we've got going on here. The potential of this, and the reason why I'm maintaining my short position, is because of the fact that this area has created itself to be an incredibly large zone of support resistance. But if the resistance fails, typically it spikes through aggressively in the other way. So I'm watching this zone pretty intently, seeing how they want to form. If we look at an ABCD move from top down, a 1-to-1 measure would put it just down at the lows, 850, 850. Retesting the 5-minute POC. The S&P, like, everything just started dying and slowing down and not doing much of anything. Either way, still holding on to it. I like this for a very nice potential short down to at least the 47s. But I mean, this has got some pretty nice potential waiting in it. And if we look back historically on the typical drives underneath this low, if it is going to continue down, is 0.59, 0.34. What's the lowest? 0.28. So as far as 0.28 goes, that's the weakest continuation that they've had historically. That would put objectives at 40, 44s, 43s. Which is right down there. So, I mean, it's perfect. See if they can get more continuation of what they want to do. POC shifting to the downside, although we've got a lot of these levels that are trading a lot of volume. We know that the POC is shifting up in an otherwise relatively large downtrend. It would make more sense that the market is building into shorts at this point in time. And since we haven't seen a viable attempt from shorts, I think it's reasonable to expect that we do sooner than later. And this might be their attempt. This slow, sideways, really crappy looking garbage that's going on here. POC churning back up again, further demonstrating what we're talking about, right? There's a lot of high volume nodes up here. It's not hard for it to shift around. A lot of volume starting to creep up on this 878. Geez, This bull bar might spark some bullishness above the highs of that, which would likely have continuation towards maybe an inside high above the 890s. They're still building the POC. I still think the shorts are building into their position for a drive back down towards, you know, that value pullback area, but we haven't quite had it yet. And the double value, where's the money? That's where the money's at. That's down in the 730s. Very interesting to see it come close to break even and start rotating back down, closing back underneath the POC, further suggesting that there is some reason to believe that shorts have something going here. I'll increase the risk a little bit. More popping back up. From the scalper's perspective, the bulls may have something going on here, but again, I'm not necessarily convinced that this phasing is done. It is above the near-term POC, so if bulls are going to take it, that would be the spot that they're going to try to buy off of in the 878s. Whoo, nice drop back to the downside. Back underneath 878, chopping back down. Any bulls who tried buying into that just got ripped in half. Huge bearishness back to the downside again. Very nice drop. Beautiful continuation back down. A lot of bulls are stuck now. A lot of bulls are stuck on the wrong side of this. Big problems here. Almost need a magnifying glass to see the ES bar. Yeah, seriously, teeny tiny. Back down to the lows. Beautiful first objective. Drive on through. Beautiful secondary objective. Continue back on down, see if we can get down a little bit further into those 50s. Hasn't quite made it yet. Now, because I did have to average down into that, which kind of sucks for my average, I've got to look for potentially wider targets now, so I still have to make sure that these fit, and that one doesn't. So I've got to approach this from a scalper, which means that I'm already beyond my target, which means I have a reason to exit down here. Very nice. Whoa, beautiful drive back to the downside. Fantastic. Now, as far as the continuation back down, I guess we don't need the micro anymore. Let me get rid of that one. Looking at this area as a major kind of zone of concern, because this is that middle point. If they can't hold here, then we're likely going to get that dive down into the major point. But remember what we were talking about from the average. We were looking at about 0.28 or so. We're right there. This is that objective. This is the value pullback based on what we've seen historically that the market would expect to give you. It doesn't have to go further. It can. But just keep that in mind. I'm curious, what's the impulse POC? Back a little ways still, yeah. Nice breakdown. Could be the middle leg in a larger continuation down to that 812s or so. But given what we've seen structurally, I can't expect that. I have to trade what the market is telling me to trade. Nice driving back to the downside. See if they can follow through with a bit more. My dog and cat are fighting. Hey, get out of there. It's mostly the cat, too. Freaking instigators. Nice bear bar to the downside. Really bad spot to try to sell. It's either going to work immediately or fail. That's a toughie. 5-minute chart flag. On the... I mean, maybe. You know, this is my concern right now. And why the bears still have a shot back to the downside, at least maybe to get back to the 81s. V-bottoms should break the high. And the problem is pretty obvious. That didn't happen. So the fact that the V-bottom didn't break the high, more often than not, they're going to churn back and try to grab a higher low. Think wedge now. So incredibly probabilistic that we see those bounce off of like the 812s if it makes it there. Jeez. Yeah, go away. Freaking pain. Still live after 10. Nice. Yeah, I wanted to make sure that I recorded that initial one because that was a really good example of a trade that didn't work in my favor really at all. It was all down to management. And during that management, there was a lot of adjusting and position movements and stuff that has to take place to ensure that my targets are in the right place. So I wanted to skip the extended session for today to make sure that I had a nice smooth recording through all of that so I could clip it. So I figured at this point, it's already 10:20. I just got out of that trade not too long ago. I might as well just keep going until 10:30, 11 o'clock like normal and just finish up the day. Doesn't make sense to transition over now. Nice drop underneath. A lot of traders taking profit into that low. That's not a surprise at all. That's common sense. The thing that we have to look at now is what's the next step. We know a lot of traders potentially exited on this dive down underneath the low. The next spot would be at the 813s. We haven't quite hit that yet, and if we're looking at this from a cyclical perspective, remember we just had that beautiful 5 wave to the upside. You'd expect to see an ABCD correction down. This has gone 1.75. Well, when you start seeing those 1.75s, I'm not starting to think that this is an ABCD correction that's small anymore. This thing grew up, right? Now we're looking at this maybe trying to get a new trend to the downside going. And that would be inside here. This could all be the middle portion of a larger third wave. From a structural perspective, if we're looking at it from the bears side, it was nasty up at the top, but they did hold an L4 eventually and then rotated down to a new low. After the L4 holds, usually, or at least what we talk about in the academy, you're expecting to see an L1 to be the next trigger, which they did. They hit the trigger right there. L1 rejected, perfect to the tick. The next rejection off, they didn't quite make it, and now we're back to the L1 kind of churning through. So with this kind of back and forth choppy sloppy action, the L1s are still holding technically. It didn't technically fail. So, they've got some they've got some room to keep this going. Where's that double value pullback? Still down there in the 30s. More continuation down. There's not really much to hold the market up in here. The next spot is down in the 813s, 814s. What a drive. Holy cow. Ah. Three press wedge. Avalanche wedge, maybe? Been a minute since we've had an avalanche wedge, huh? Wow. Doesn't quite qualify. I wish it was a little stronger, but... walks like a duck, quacks like a duck, you know? S&P challenging the 5-minute POC 56 quarter. If we look at the first 15 or so on the NASDAQ, we can see that the buyers took over at around the 812.50s. If we carry this on further forward, it looks like the majority of the exiting took place in the 86.50s or so, the 865s. More continuation up, no POC shift, a little bit of POC shifting, and now we've got potentially bears in charge to the downside once again. Got 10:30 around the corner. There's not really any other news or anything else going on, so feel free to get those questions in, get those all in, and then we'll take care of those too. Market's starting to churn back to the downside. Looking across the board here, We've got the S&P, which is just holding its base down at the lows. We've got gold, which it's a fairly decent pullback to the L1. Did they actually hit it? No, they missed it. Are you serious? Would they miss it by a tick? 20.6, 20.5. Yeah, literally by a tick, they missed the L1. Okay. Well, I mean, technically it doesn't count, I guess, but man alive. Really nice bounce off of that, I suppose. Next zone would obviously be coming back and retesting the L2 inside some of that previous consolidation, but I still like the L3 more. Sellers attempting to get more continuation to the downside. If we're looking at it from the peak all the way down to where we are at the moment, that POC is still up at the highs. That hasn't changed. Nice bear bar to the downside. Sellers looking for a bit of continuation. Give me a little bit of a pop. There we go. Sellers have the ability to try to churn this back down through the lows to get another crack underneath the 30 quarters. Nice zone of interest for a follow-through breakdown. Pop it. There we go. No, terrible fill. Oh, gross. Terrible fill. Oh man. I hit the bid and I got filled like 2 points later. Ugh, gross. All right, I'm going to stay away from the NASDAQ down here. It sucks down here. Jeez, oh Pete. Tried to hit the bid down at the bottom, didn't get filled, had to cancel, hit the bid again like 2 points later. No thanks. Let's wait for some better pricing here. Market's going very sideways and gross. Obviously, we can narrow this in a bit tighter now. Structurally, almost perfect, huh? See if the sellers want to go for round two. Nice bear bar back down. There's not much to hold the market up, but they're forcing traders to sell at the lows, and the last time I tried that, that was absolute just terrible. I mean, it worked out in my favor, thankfully, but it was just gross. 2 point slip fills, no thanks. Next point of interest is going to be back here where the market finally churned back to the upside. Down in the 1350s. Got a long way to go for that double value pullback yet. Nice drive to the downside. First test of that last POC. And if we look at this from a continuation breakout standpoint, we've got this really nice dive down. It's weird looking, but sure. And next point would be the one-to-one move. Put it down at 791, just down to a new low. Jeez, oh Pete. Huge drive down. Now testing the DP level at 88. Oops. Now we do have a new low, which means that this whole thing technically confirmed that POC that was up at 878. That's how long it took them to do it. What a mess along the way. So this is the major swing, obviously, but the major swing's POC is at 878. We did hit the one-to-one move to the downside as well, so we're kind of at the bottom of the near term. After that, we've got the double value pullback, which is down in the 14,730s all the way to the 696s. If we're looking at the previous volume nodes down from the lows up to the initial high, any lower than that would be at 14,635 would be the next, the only thing that's left, really. All right, and here it sits. How about the S&P 5-minute? The S&P 5-minute at the moment, I mean, like we were talking about, we opened with an outside gap down, and yesterday's low is going to be the zone of interest. The market tried coming up into it, and on the first candle immediately failed down. When it rolled back down, though, it created a POC down at the lows. And you'll notice what the market just bounced off of, right? The S&P just rotated off that 43.50 retest on the first 15-minute POC. I don't know if it's still there. We got to move it to actually figure that out. But, you know, it's we don't believe in coincidences here, right? So with that kind of bounce, that would at least suggest that if sellers were short, maybe they're trying to position out. Now, if we drag this all the way further forward, we can see pretty clearly the POC's up at the top. And if sellers did take over, which obviously we are under the POC, I have to assume they did, longs got stuck up at the top and shorts are in very profitable territory. I mean, they were barely underwater based on the average. Doesn't mean they weren't along the way, right? But based on the average, we know that generally speaking, they're in a very profitable territory. What better spot than to take profit back at the first 5 minutes trap zone where the sellers got stuck? So it makes a lot of sense to see a bounce here. It doesn't mean that the trend is necessarily done reversing. We could just rotate right back up, hit the 5-minute POC, and jump all the way back down again. Remember where we are in conjunction to the 5-minute POC. We're underneath it at 56.25. That would at least tell us we've got some potential issues. I can't be a buyer unless we're above that, and I certainly am going to have a hard time being a buyer if we're under a major POC like this, 43.59.25. So I think a lot of sellers are looking for opportunities. There'll be sellers who are selling above the last bear bar. Their stops will be above the highs looking for scalps. There'll be traders who are looking to sell this possible little shelf here on that bull bear bar transition. Another nice little shelf up at the top, the POC, obviously. You know, all of them. They're all qualifiable. The most logical one would be 59.25. But... yeah, no problem. Not really seeing a whole lot of anything happening across the board here. We're just kind of hanging out in no man's land on the markets. I would like to see the NASDAQ push either a little bit lower or bounce here, one of the two. As far as swing longs, short-term swing longs looking for your typical value pullback, we're there now. Right? We already have the value pull. I exited my shorts. We've got the value pullback. We're in the zone, if you will. Doesn't mean that it has to bounce here, but it always has before. So, I mean, realistically, that's kind of the anticipation here, is that we do see some bouncing. It already has once. Maybe that's good enough. I prefer double value pullbacks to really find good bottoms. And that's not going to happen until down here. All All right, we're going past 10:30. We've got probably another V bottom happening. Feel free to get those questions in. We'll get those covered for you. I mean, realistically, if we look at what's been going on, we've got a downtrend still intact, although really gross looking. We've got lower highs, lower lows. Still. The confirmed swing is way the heck up here, but technically, lower highs, lower lows. The trend continues. Nice bear continuation here. Sellers may be a bit more nervous given the bullishness to the upside, though, so it could be difficult to sustain. Ton of volume coming in at the 800s. All right. Well, I'm not seeing many other questions coming in. Let's do final call for questions and we'll wrap it up for the day. Head off into what's looking like a pretty dreary, stormy, gross day for me. Ugh. And here we sit. Market's just kind of hovering. As expected, the sellers are going to have a slightly difficult time taking it down again. POC stuck right up at the top. A lot of sellers are trying to get the continuation down. Otherwise, here it sits. All right. Well, I'm not seeing any other questions coming in, and I really don't know that I want to put any more risk on the table. We had that short build in from the top, nice drive to the downside. Follow up after that. The S&P gave me a little bit of trouble, basically a break even after everything was said and done. So that'll do it. Yeah, kind of a meh sort of day, all things considered, which I guess makes sense looking at it in hindsight. V top, V bottom, not really many pullbacks in the middle. I think as far as the movement is concerned, realistically, we're in a zone where a lot of swing traders are going to be buying this low, and it makes a lot of sense. I would still much rather see a pullback down into the 26s, 27s. I think this is significantly more favorable down there. Whether or not it'll actually take place, well, we'll have to wait and see. Some things that might try to send the market down that way. We do have some other large completionary targets, the 1618s down there. That would be basically a huge measured move to the downside. Perfect area. Back into the previous consolidation too. I mean, man. But it just won't get there. So, how about for the S&P? Let's see here. For the ES, in terms of value pullbacks, the last pullback, 0.71, 0.53. Whoop, that little guy inside there, 0.51. 0.7, 0.69, and right now it's sitting on 0.89. So, I mean, realistically, it seems like 0.7, 0.8 is pretty normal, on the low side 0.5. So if I were to double that up, I'd look at 1.6 to 2%. Right, 1.6. Well, let's kick it down just a little bit, because sometimes it is the 50% as well. So that would put support a little bit wider, 23.25-ish, down to 14. But again, it could potentially extend down to the 2% mark because, well, none of them were actually 2%, were they? So 1.8 is probably the furthest. And just eyeballing it, that would put it around 0.06. Oh my God, I cannot get this stupid line to land straight to save my freaking life right now. There we go. God. All right, so that would be the zone of interest down there. Multi-bracketed, but nice little spot. All things considered, even way up at the top, if they were looking at the bottom side, we have to ask ourselves what kind of traders would these be. This is why I say this might be multi-bracketed, because a 2-to-1 doesn't fit there. But if we go a little bit lower, all of a sudden, the 2-to-1 fits there. So this, depending on how aggressive they are, right, it might not be able to make it down that far, but this would be the zone. Optimized entry points would be a bit further. Double value pullback. See, I didn't forget. POC shifting back up. We've got a nice two-legged corrective phase back to the upside. Not buy for the S&P. I think it's a buy for the S&P. Just it's either right now, which is going to be the typical value pullback, right? Which is what it's sitting on at the moment. So either it goes from here up to the highs, which means that, again, buyers are low probability, low risk, high reward. Their stops don't have to be very far down, but their targets are way back up at the top. If that does not succeed, then chances are the double value is next. So I don't have anything against buying down here. I just have to assume that I'm going to be lower probability than I may be comfortable with. I would rather buy the double value to put the wind in my sails. Along with that, if we go from the bottom all the way up to the top, we've got that POC, which is up at the highs. And if we roll it all the way forward, we can see what they're trying to do. So from that perspective, that's kind of a bummer. Their 2-to-1 targets are way up here. The 3-to-1 targets for them are down in that zone. Yeah, I was hoping that would line up a little bit better, but I guess not. The only other consideration would be back here at that last POC before it took off, which is also down in the lower area. So I think it makes more sense to be down here than up here, although it might bounce out of here because of that. So, vindictive things. On the 5-minute perspective, oh man, they're starting to churn underneath the POC again. We're still underneath previous low a day. I think the sellers still have the edge. It's too difficult for the buyers yet. Not that they won't try, just a bit lower down, right? All right, that'll do it, though. I'm not seeing any other questions coming in. So as for the day, a little bit choppy, sloppy. But, you know, looking at it back in hindsight, I don't think I could have really managed it any better other than maybe holding out in the trade a bit longer. But my reasoning for exit was valid. So I have a hard time saying that I mismanaged anything. But, you know, it's always easy to beat yourself up on when you look back at, like, man, how could I not have held for that giant move down? You got to look back at the time. We didn't have that info, right? The info I had was down here where there was a lot of support. I've got to play it safe. So I think realistically, we did a pretty solid job in terms of trade management and finding the good locations. It's just the market had a bit of some teeth to it today. All good, all things considered, I think. So hopefully you had a great day of trading. If I missed any questions, feel free to shoot me an email, jhb@ssftg.com. I'll get those covered for you from there. Otherwise, though, keeping an eye out for those big double value pullbacks. Those are next. We'll see if we can get a nice little dip into the afternoon for a rip into tomorrow. Or probably Euro session, right? That's where they always get things done. Anyway, enjoy the rest of the day. Have a good one. And we will see you all tomorrow, right? Talk to y'all later. Thanks.